This just happened 2 days ago on Twitter. I don't know if you guys saw this. This person says, I plan to increase my stake in Tesla in the coming weeks and months. And what did Elon Musk say back to that? Elon Musk didn't have to say anything, but Elon Musk just decides he wants to chime in, okay? Elon Musk says, please advise people to be wary of margin loans. Tesla has always been a high variability stock, often with no obvious rhyme or reason. We are confident about long-term value creation, but cannot control the manic depressive nature of the stock market. That's quite hilarious. No, you know what's fascinating about that is Elon Musk, I swear, every time he ever tries to talk down the stock, it's like usually the biggest buy signal in the world. I swear to you, every single time this guy's like, our stock's too high, or, be wary of margin loans, or whatever he tries to talk things down, it seems like shortly after that, the stock has another beast run. And so you could have read that, right? You could have read that as, oh, Elon Musk knows some bad numbers are coming. So therefore, because he knows these bad numbers are coming, think about it. Like, a lot of the shorts, they're the biggest like Elon Musk followers on Twitter, man. I didn't even know about this Elon Musk thing until somebody had showed me it very recently here, I saw it in the last hour or two, right? I'm telling you, these Tesla shorts, they got like notifications on for Elon Musk. Like as soon as he posts something, what did Elon say? And I wouldn't be surprised if some of them saw that and went out there and short sold the stock, went and bought put options, figuring, Elon's basically saying that the numbers are going to be really bad. I mean, you should know Elon Musk in these tricks by now. I mean, usually whenever he comes down, speaks bad about the stock, it usually flies higher, right? And so it'll be very interesting what happens to the stock now, okay? And we're going to speak about the stock impact, the numbers impact, and what this means for the overall market here in just a moment. But to kind of finalize my initial thoughts here, okay, as a Tesla shareholder, man, I've got to say, I don't think I've been bullish enough on Tesla. I'll just be honest, the way I keep seeing them put up these damn numbers, the more I'm like, I don't think I've been bullish enough. Sometimes you're too bullish on a stock and sometimes you're not bullish enough. And I just feel like for me personally, I haven't been bullish enough on Tesla. They put up these numbers, and I'm a Tesla customer, right? My two daily drivers are a Model X and Model S Plaid, right? And I know how great Tesla's products are. But at the same time, I am aware of the interest rate environment. I am aware of the kind of concerns about what's going to happen with the economy and all that kind of weariness we have out there. I'm very observant of how bad consumer sentiment has been over the past year and all these different factors. And yet, even despite all of that, Tesla puts up these shockingly great numbers almost every single quarter. And as a Tesla shareholder, every time I'm just sitting there and I'm just like, how the hell do they do it, man? How do they do it? And I'm still trying to figure it out. Like I'm just like, they just did 83% growth coming off of insanely tough comp to comp against. How the hell did they do it? Literally, I'm just like, how are they putting up these sorts of numbers? It's extraordinary to me. Like I always expect Tesla to grow. But 83% year over year on those tough comps, it's just shocking, man. And that's the type of stuff that I'm just like, I don't think I've ever been bullish enough on Tesla. You know what I mean? I'm just crazy, absolutely crazy, okay? I have significantly outperformed the stock market in the public account, which is a portfolio I started about a little over 5 years ago now. At this point in time inside the private stock group where they've been able to see every single move I've ever made in there, every single buy, every single sell I've ever made in there. This is all calculated by Fidelity Investments, the most reputable stock brokerage in the world. Time-weighted rate of return as far as the public count over the past 5 years, 22% on an annualized basis. On a money-weighted rate of return, we're at 19.7% on a 5-year basis. So whichever way you want to do it, essentially, I'm crushing the market. The S&P 500's at a little over a 12% gain on average over the last 5 years. Dow Jones U.S. Total Stock Market Index, about a little over 11% gain over the past 5 years on average, okay? So those are annualized returns. We've absolutely crushed the market, obviously, and that's despite making several key mistakes in that portfolio. I certainly haven't run that portfolio perfect at all and still absolutely crushed the market. And it's not even close. That's the thing. It's not even like a close game here. And this is why I do this game, right? This is why I spend all this time researching companies, investing, taking the risk and those sorts of things is for this sort of outperformance. Because when you run these numbers over a 10, 20, 30-year span, the way it's going to change your net worth is dramatic. There's two things that can massively change your net worth when it comes to investing, okay? It's very important to understand these two things. The two things are how much money you're able to put in your portfolios and what is your rate of return. Those are the two things that are going to drive your long-term wealth in a massive way. How much can you invest on an every month basis, and what's your rate of return, okay? And so the goal is to make as much money as possible, to invest as much money of that money as possible, and then to get as high of a rate of return as possible, right? That's the whole game in regards to this. And so the public account now, like I said, it's a little over 5 years old. It's over $1.7 million now at this point in time, right? And it's interesting because I started this portfolio for two reasons, a public account. One reason is, as somebody that is a teacher of this subject, right, of stock market investing and how to be a successful investor and understanding all these things, something I realized is no one really puts their money where their mouth is. Like, you could read a book on investing, you could, buy a course on investing, these sorts of things, but no one's really putting up money like that. And so I'm like, let's build a real money portfolio and show people how it's done so people can actually learn from me and learn how I diversify a portfolio, the moves I make in there and things like that. And the second reason I started that portfolio, other than that, was back in those days when I was on YouTube, there was a lot of debate about, well, you can't outperform the market. You're not going to be able to outperform the market, and a lot of stuff like that. I was just like, okay, that's laughable to me. Like that's almost a joke. Like, you kidding me? I can't outperform the market. Okay, that's a funny joke. But the more I started to realize and go down the rabbit hole over the years, the more I started to realize it's not a problem with me. It's just like people literally don't think you can outperform the market, which is the biggest crock of crap you could ever possibly believe. But a lot of people are brainwashed to think that, unfortunately, without any evidence whatsoever. Like, they're just brainwashed like that, right? And you got all these things kind of go together, right? You can't beat the market. You can't get rich. You can't get famous. Like, all these things go together. You can do any of those things. Like, literally any of them. Any of them. You can beat the market. Yes, you damn can. You can get rich. Yes, you can. You can get famous. You can become a pro athlete. Whatever you want to do in this world, right? But we do know a couple things. You better put in a heck of a lot of work, and you better have a great strategy. If you don't have a great strategy and you weren't willing to put in a lot of work, yeah, you're not going to achieve any of that stuff. I can tell you that. You're talking about being an outperformer. You're talking about being the creme de la creme, right? And so if you want to achieve anything big in life, right, which I would say, if you can consistently beat the market over a 5-10 year span, that's pretty darn big, right? You're going to have to put in a lot of work, and you're going to have a great strategy on how you actually pull that off, right? Because you're talking about being somebody that is in the minority of folks out there in order to achieve these sorts of things. And in order to beat the market, you don't need to work on Wall Street. Absolutely not. I mean, most people that work on Wall Street can't even keep up with the indexes. Literally, they're underperforming the indexes. Like, if you look at their public account, okay, they're underperforming the market. They can't even keep up with the market, okay? You don't need to live in Wall Street. You don't need to live in New York City, right? Financial district. You don't need any of that. Look at Warren Buffett. Man's done tremendous over the years, and the net worth that man's built out is insane, right? He lives in Omaha, Nebraska. He doesn't even go to New York hardly ever. And it's incredible to see what that man's built from Omaha, Nebraska. You don't have to be in New York City. You could be anywhere in the world. It has nothing to do, and actually, and Warren Buffett will tell you, the more you're around these Wall Street folks and more you're in New York City and places like that, the more likely you are to actually underperform the market, because the more you get into group think. And a lot of these Wall Streeters all talk to each other, and they start kind of thinking the same, and they're all running out of the market. When everybody else is running out of the market, they're all running into the market when it's FOMO time. And that's why a lot of these Wall Streeters can't even keep up with the market. They can't even dream to beat the market. They can't even keep up with the dang thing, okay? You don't have to get straight A's, and you don't have to have a super high IQ. This is not to beat the market, to beat the stock market, to beat the S&P 500. It's not a game of who has the highest IQ. That's just not it, okay? That's not it at all. There's a lot of people that have very high IQs or would be horrible at stock market investing and understanding how to run portfolios and things like that, okay?